G'day guys, Jason here from Positive Real Estate and welcome along to our Friday update. A bit of information, some tips and strategies of what's going on in the marketplace and as property investors what we need to keep an eye out for. Hey, something that's happening right now and it's really sort of a hot topic and everyone's keeping an eye on it is interest rates. Hey, the RBA held interest rates the other day and that was interesting. You know, people were hoping they were going to go down. You know, some people even on our Facebook page were hoping they were going to go up. And you know, it's like a bit of a hot potato, the old interest rate conversations. You know, when do you make your move? Do you wait for the interest rate to go down or up or whatever it might be? And it's a good question because interest rates quite often are precursors to things that happen for us as property investors, growth in our values of properties and growth in the rent of our properties. And so, you know, we need to keep an eye out for that sort of thing. The rates in the banks at the moment, the RBA and the main banks are having a little bit of a standoff. You know, ANZ came out and said officially, we don't care what the RBA does, we will be setting our own interest rates from here on in. If they drop, we might not drop, we might even put our interest rates up. That'll be really interesting for the future. And the great thing about Australia is you vote with your business. So if their rates are too high, go somewhere else. Right now, or in the past, what used to be difficult as a property investor is you get a loan with one institution and another institution would have a better loan and that would save you some interest, which is always something we've got to keep an eye on. And you know, you want to change from one bank to another and you'd have a thing called a deferred establishment fee. And they would slug you quite a lot of money, sometimes you know, thousands and thousands of dollars. We've had clients who fixed their interest rates and when they wanted to break that fixed interest rate, some of them got slugged $15,000 and $20,000 to change interest rates, so they were stuck with that lender for a long time. And so deferred establishment fees have been abolished. Nowhere in Australia, no lender is allowed to charge them anymore. So that's fantastic for us as property investors. It's fantastic for any consumer of a loan. And competition, I think, will get a little bit better out there in the marketplace. I'm really looking forward to that. It's interesting, I mentioned before, that interest rates can sometimes trigger some sort of growth in rental yields or some sort of growth in property value. Now, when interest rates go really high, and we saw this in the GFC, and the interest rates went up to sort of 8.5%, 9%, something that followed with the interest rates was our rents going up, especially in some of the larger areas like Sydney. We experienced some fantastic growths because of our interest rates going up and the owner of those properties needed to keep up with the cost of owning that investment property, and they put the interest rates up the rental rates up as well. So great thing, sometimes when the interest rates go up, the rents follow and you can get a much better rent. Now consequently the interest rates have come down but the rents have stayed the same or even continued to go up because of other factors in the marketplace. We talk about them all the time: supply and demand, demographics, you know, other bits and pieces, some other drivers. But today I'm talking about interest rates. Interest rates go up, rents go up, interest rates go down. Most of the time the rents stay the same or continue to go up a little bit. And it's interesting, right now we have a thing called parity in Sydney, especially in Western Sydney and some other places in Australia, where it's now, the interest rates, some interest rates you can get 6.5%, 6%, and the rental yield, or what it cost you as a renter to own that property, would be the same or even less if you were to own it than it is to rent it. Right? And so what happens then is people start to say, well, why would I rent? Why wouldn't I buy? And if they've got access to some equity or maybe some first homeowners grants or a little loan from mum and dad, you'll see a bunch of buyers come back into the market and buy properties. Now I believe that's going to happen in Sydney, especially in the next 12, 18 months, 2 years, and we'll see some growth driven by new buyers coming back into the market because it's more expensive to rent than it is to buy. That's coming. I can see that. We can see it because the rents are so high and the interest rates are so low. So I'm excited about that. That's a good thing because we have been buying as positive real estate investors in Sydney for ages. All right, you know, we use the property clock, here's one I prepared earlier, as a bit of an indication of when to get into a market. And let's just use Sydney as an example. In the GFC, Sydney went through a slide. So let's say Sydney was up here, hot before the GFC, the values decreased, went down, and they came down to the potential buying place in the marketplace. And when Positive Real Estate, we're always looking as a buying opportunity in a marketplace to be at the bottom or just moving out of the bottom. Not on the slide still, but hit the bottom and hopefully on the way up. Okay? And so in Sydney, we started to look around. We found some properties that started to move and some indicators. High rents, good prices, and we got in and purchased those properties. We believe Sydney's moved well off the bottom and is trending upwards, okay, which is great. Now, another place that's really good right now is Brisbane for buying. It hasn't done anything for about 6 years. Okay, we believe it's pretty well at the bottom, and you'll probably see next year, the next 12, 18 months, you'll see its trend just moving away from the bottom and just starting out. So it's a nice time to be sniffing around there. Sydney's still great, Brisbane's coming up, and so we're looking for those things there. So what, interest rates have gone down, rents have gone up, and so as property investors, that's fabulous. If interest rates go down a little bit, it'll be even more exciting. Even if they go up a little bit, I'm not concerned as an investor because I've got the places where we've got good rents. And we've got to keep an eye on when the properties get in the hot time. Melbourne was a hot market about 2 years ago, 18 months ago, 2 years ago, and people were buying at the top of the market and now are disappointed about Melbourne's growth in the last 12, 18 months, which you've got to be sure of your timing. Hey, listen, that's a couple of little tips and strategies just to keep an eye on things as you move along in the property investing marketplace. If you want to know more, I encourage you to get along to one of our property investment nights. There's a couple of hours. Our coaches, our professional coaches and professional investors are there on the night talking about the market and how to use this clock and how to get the most out of your property investing. So if you want a free night with some good networking and some great information, I encourage you to come along. We hold them in many, many cities around Australia. Check out the website. We'd love to see you soon. Until then, take care and stay safe in the marketplace.